Hi everyone, welcome to another insightful episode of CS Rajiv Bajaj episode of Evolve and Execute. I'm a startup coach, strategic advisor, mentor, and founder building next generation of enterprises. Today, the conversation focuses on a topic that sits on at the foundation of every successful business, but it is often overlooked by an early stage founders structuring and navigating the right legal and governance framework. Many startups begin with very passionate start. They have a lot of thrust on innovation and speed, but as they grow, the structure of the entity, compliance discipline, governance practices determine whether the business becomes scalable or sustainable in chaotic and risky environment. So choosing between a private limited company and a LLB is not just a legal formality. It shapes the fundraising ability, operational flexibility, regulatory compliance, and long-term credibility. To explore this very critical topic, we are joined in by Mr. Yogesh Wagle. Mr. Wagle is a principal partner and chairman and a strategic advisor who has helped businesses secure partnerships, expand domestically and internationally, and build strong institutional foundation. Welcome, Yogesh ji. We look forward to have an insightful conversation with you today. And I'm sure the founders who are watching our program can understand and build compliant, resilience, and future-ready enterprises. Welcome to the show. Can kindly introduce yourself?
Hi, I'm Yogesh Wagle, Principal Partner of UFB Universal Consulting LLP. We are a mid-sized multi-consulting firm headquartered in Mumbai, India. But over a period of just 2 years, 3 months, we are now in Portugal, London, of course, Italy. We are opening shortly. USA, because our own dedicated ventures is based in USA, San Diego, and in addition to that, we are also based in Switzerland. We are focused in commercial lending and commercial law, but we are catering to startups as well. We are catering to these startups, especially we are trying to make our Indian startups truly Atmanirbhar Bharat.
Thank you, Mr. Wagle, for that brief introduction. As you know, many founders focus heavily on product and growth. Why is choosing the right business structure equally important at the early stage? Can you throw some light on this?
Well, what makes the startup more robust and truly adapted to the ecosystem is the right structure. Structure or the foundation is the contributor to later on growth and revenue for that startup. If the structure is not there, then tomorrow, in spite of incorporating the startup, I don't see that whether the startup will last even for 1 year. Thank you.
All right. From your experience, Mr. Wagle, what key differences should founders understand when choosing between the private limited company and an LLP?
That's a wonderful question. Well, Rajuji, it depends on the type of what the company is offering. If that company is into manufacture or bits of high value trading, then for them, I would suggest it should be a private limited company. But if they are purely into consulting or e-opinion base or e-outsourcing base, then LLP is always the better choice because as you as a CS understand, LLP offers less compliances and here it's more simple rather than a private limited company which LLP can easily comply. Thank you.
Right. I think you made it very clear. At what stage should the founders begin taking corporate governance and compliance seriously instead of treating it as a formality?
Yes, that's Rajanji. It's a really very daunting question. Uh, let's understand that if to make the startup successful, I would prioritize risk governance and due diligence at the very start, not at a later on. Means when a company is incorporated, it should be made a mandate should be struck between the incubator that please make the company compliant and due diligent right now. There is no tomorrow in that because what really fails, if you ask me, the reason for maximum failures in a startup is because this E avenue is neglected. I'm using the word neglected. Prevention is better than cure. I always believe, and a stitch in time always saves nine. So I would request the startups that please first focus on structure and make the structure more risk compliant rather, and later on they can focus on the growth and other things. Thank you.
Okay, great. What are the most common compliance mistakes a founder make while running a private limited company or LLP? Because founders do make mistakes. So, what is your experience on that?
Yeah, I will explain to you. Let's understand, as I mentioned in the first question, first is structure. Look, let's understand a startup is created in majority of the cases as a very on the basis of acquaintances, on the basis of the incubator, that two friends, let's make a startup. So here I feel that this is where they should make a proper agreement. They should make the proper structure that okay, if we are दोस्ती दोस्ती चलता है बट धंधे में धंधा होता है दोस्ती यारी नहीं चलती है so let's make everything on paper first that this is what in a net overall this is my risk, this is my in your loss, this is my share in profits, this is my share. So everything should be conceived on paper and on the basis of that it should be done. Now second aspect which I have seen is neglected is the risk, though they are very much said in the Companies Act of 2016 and 2013. Fortunately, unfortunately, this is not done by a CA or a CS. That in guiding the company or enterprise about their due diligence vis-a-vis to indemnity. Each and every company should indemnify. They should ensure their capital, their paid up capital and share capital, so that tomorrow whatever the risk which come can be mitigated or totally zeroed out. Thank you.
All right. So, how does the right corporate structure help companies attract investors, strategic partners, and global opportunities? Can you throw some light on this?
I will give you the best example of my own company, CFV Universal Consulting LLP. What we have done, let's take the structure. In structure, in normal companies, what they say in private limited, oh, if it's a team of two people, 50% your share, 50% my share. So tomorrow, how can an investor or how can a you can say growth partner or how can venture capitalists really be open to invest in a company which is closed, which doesn't allow participation in that profits or revenues? Here we need to change the wording. When you want to say that, oh, in our company itself, we are having 100%, but in this 30% is kept aside as a solvency, sir. Means tomorrow, if anyone wants to be our partner, they will get within their own share an X percentage. So we have kept open for investors, or you can say for those who want to pour money into GFV, we keep option open. If a company wants to really develop in the long run, they should always think of keeping some profit margin, some share for the outside people also, for the investors or for patrons. Thank you.
All right. So, what role does the board discipline, documentation, and decision transparency play in building a credible enterprise? Because credibility is very important. People give money on credibility only. So, what is your experience on that?
That's a very wonderful question, and that's why I hinted on our own GFE, Universal Consulting stick. It is all when you are open to other people and their ideas, their contribution as an advisory or as an indirect player. It builds in a later on stage something called as the credibility. And one more factor I would like to highlight is long term reliability. If you are having credibility and long term reliability, ultimately this changes the entire power equation, and that startup will have a long term growth in the next couple of years. Thank you.
All right. Many founders view compliance as a burden. How can they shift their mindset and see it as a strategic advantage?
Rajiv ji and Divya ji, this is where it really, rather than the startup, it is where we should groom the incubators who are responsible for accumulating the startup. Our incubators, they have become more like only the office space for the startup. No, they should change that attitude. How we have done the business, if you, I think I have tagged you and Divya ji, is we have taken e-incubator of some companies. And in 33 startups, we have only guided, we are only willing to fund 5 people, not the rest of the 28. Means we are stringent in this quality checks in terms of due diligence, transparency, clarity, and more important, corporate governance. Corporate governance isn't only what Rajiv ji, what board stewardship is doing, not about flaunting something in business course, in on talking big things about corporate governance. It's actually understanding from base level. It is on understanding other functions. A founder, let me give one case study to prove this. I know one startup, it was a very wonderful startup. They were more in tech, but still they flunked because their HR was weak, their marketing was weaker, and legal aspect was also weaker. So technically, I would encourage the startups who want to be Maharathis also in the other field, and the other fields will ultimately boom the startup to the next level. Thank you.
All right. As the company scale, what governance system should the founders introduce to ensure sustainable and compliant growth?
First, let's understand, as I mentioned, the governance, I say, is a more theoretical word, but I'm describing the basics as to what really leads to a good governance. First is structure, which we discussed 12 minutes back. Having the right structure and creating a commercial contract to define the structure is priority one. Secondly, taking every tool of risk management also is the second step, because if you have a risk management in order, then tomorrow the startup will go to the next level. It is not going to fail at the first level. So first is structure, second is risk management, and third and the most important, Rajiv ji, is creating for traction, or should I say, this is the avenue for business development, public relations, and events and promotion of that particular startup to propagate the way ahead. Thank you.
Okay. So, many companies are expanding internationally, and you also told us that you have branches in overseas countries. So, when expanding internationally or entering strategic partnership, what legal and structural preparation should founders, need to do the business there?
Rajaji, that's one thing which really needs to be done. Let's understand, if I'm expanding, okay, should I say internationally again is a very different word. But let us take about our own Bharat. Let's talk about our own India, which is a big country, which is called a subcontinent. If I am expanding from Maharashtra to Gujarat, if I am expanding from Maharashtra to even Rajasthan, first, I should know about the jurisdiction. Secondly, I should know about the basic corporate laws existing in that region. Third, I should know about the work ethics of regional people over there. So this core area is what I am going by the word international. I say international is aspect when you are going outside your home location, and when you talk of international, it is more stringent, Rajivji, because international laws are not like as in India. You as a CS are more aware than me that the laws over there, the jurisdiction over there is more stringent than in India. There they first say everything should be in order to the minutest. उधर 19-20 का वर्ड चलता नहीं है, उधर 20 के 20 ही चाहिए. There is nothing called even a space of chalta hai in that international countries. Thank you.
Absolutely right. If a founder wants to build a company that lasts for decades, what three governance principles must they never compromise on? Can you share that?
Uh, Again, I always advocate for the three really points which I mentioned. But according to me, the 3 points which I'm mentioning, first, structure. If you don't have a proper structure, don't start a company. First, create a structure. First, know the own founders. The founders should know each other's like partners. Like how in Rajiv in marriage, I know more about my wife and she knows about me. And ultimately, Rajivji, marriage is also a contract. It's not only just a paperwork, right? Similarly, founders should know that they are marrying to each other, of course, commercially. Second, the risk management element. This is where most of the founders really face the flag. They don't, they start a company, they start everything, but if they are not doing risk management, then you are aware of what happened to the big unicorns who created wonderful unicorns and then flung. Thank you. This is what I am telling you.
So, we have a rapid fire round where we ask you quick questions. We just expect one line answers. Private limited company or LLP, which structure support faster scaling?
LLPs. Private
Great.
limited, as I mentioned,
Compliance.
you are in manufacturing. Yeah.
Yeah. Okay. Compliance or speed? What should founders prioritize?
First is compliance, not speed.
One governance habit every founder should start early.
The main is always governance, not the early stage.
Okay. Focus on governance, you mean to say. Okay.
Yes.
Documentation or verbal decisions?
Uh, I gave the best example. Uh, like a marriage, there is no
Mhm.
verbal thing. Everything should be on paper. Commercial contract is a main element.
Bootstrapping discipline or investor pressure?
It is bootstrapping discipline, not investor pressure. Because bootstrapping is the ideal key for tomorrow's Atmanirbhar Bharat startup.
Mhm. Most ignored compliance risk in startups.
Most ignored is, of
Compliance
course,
risk.
that is, as I mentioned in the first part, it's the indemnity. This indemnity is lesser known in the startup and even in the incubators and their own chartered accountant or CS panel also. They should
Mhm.
understand that Companies Act 2016 makes it provisional to actually apply the indemnity to safeguard the paid up capital and the share capital of that company. But very few
Mhm.
companies have achieved that.
All right. Domestic focus or global ambition?
It is as I mentioned, the first 1000 days of the company should focus on domestic. And later on, depending on the thing, they should move into international market, sensing what is the best for that startup.
Founder control or structured governance?
It is the second part, not the first. Structured control is always the key to success for that startup. If a founder is having absolute control, what happens is the case like Byju's.
Yeah, yeah. So, growth mindset or risk management mindset?
The second part I would advocate. If you risk management, as I mentioned, is the elementary part which one shouldn't neglect. You should think of the risk management at the very start because this risk management, if we counter, growth will automatically follow.
One leadership quality that builds sustainable enterprise.
It is founders lack inclination or intent. This single quality is really defined from the excellent startup and to the mediocre startup.
Thank you. I think today's conversation was very interesting and it highlighted the important realities of the business. Great businesses are not built only on ideas and execution, they are built on strong foundation, disciplined governance, and structured growth framework. The right entity structure creates flexibility, and definitely that brings credibility and compliance culture in the organization, and the governance builds the trust with investor, partner, and stakeholders. So, any last word of advice for our viewers today who are watching this episode?
Well, I'm having one single word for all the startups and even scale up. That first emphasize on laying a concrete structure. A proper construction will be done only if there is a plan. Similarly, in corporate world, if you don't have a structure, then no company will go beyond even a single year. Thank you.
Right. Thank you very much, Yogesh ji. I think for sharing your valuable insights on how founders can navigate their private limited companies and LLPs with clarity and discipline. And to our listeners today, building a company is not just about launching fast, it's about building something that lasts. And that is the key. So, if today's conversation has helped you rethink how your structure and governance uh, systems in your business can work, do share with your fellow founders and entrepreneurs. And be in touch with us. So this is CS Rajiv Bajaj signing off from Evolve and Execute. We'll come up with much more interesting topics in the months and years to come. Thank you, Mr. Yogesh, for joining in. Thanks a lot.
So, all, thank you, Divyaji. Bye bye. Take care.
Thank you.